I want to do the blacklisted asset classes because I don't want to say turning off my brain, but I like little algorithms to where when people are asking me questions, I can just say that's going to be a no. Well, if it's a variable annuity, whatever the rest of your question is, it's going to be a no. No, it doesn't matter what the terms are. It doesn't matter what kind of income rider you have on it. That's just it's a no, right, Gregory? Is there any variable annuity, any situation where someone's saying, I want to follow the guidelines of the invest 50/50 strategy, and I think this variable annuity is going to fit in? You would say no to all of them, right?
No. Uh, I couldn't fit in a variable annuity, but mostly, even if you said, well, let's put it in door number one and use stocks in it. Well, I couldn't do it. Why? Because of the fees. The fees. Way too high when you could use ETFs and be much lower. Most money's qualified, so I don't need a insurance wrapper that I still have risk with, and then typically have 2 to 4% in fees. I just can't see where to use a variable annuity.
All right, so I wanted to start with that one just to show the guy listening. See, there are some absolutes when it comes to these things we talk about. All right, so now if variable annuity is a asset class that Gregory's just flat out blacklisted, we know what door number one, door number two, door number three are. These are good asset classes. You don't have to use all of them, but you're down with door number one is stock ETFs.
Yes, typically linked to indexes, and we have plenty of choices there.
Door number two is fixed annuities. It might be fixed indexed. It might be just fixed
and
interest.
we'll define as index linked investments because what we want more of those stock indexes or variations thereof to where we get the upside, but we don't want to. It's enables us to have money where we get upside of markets from a participation rate, but we don't have downside exposure. And that lightens our load, lightens our risk using that behind door number two.
And then door number three, bond ETFs. It's how you get in the bond world without actually getting the single bonds and having to go through all that mess.
Yeah, it makes that world easier versus going out there, buying a bond, and then if you're wanting out, you have to list it for sale. It's a lot easier tool to use and super efficient once again that way. And you have variation of bond packages, basically bond ETFs.
All right, so now we know what one of the blacklisted asset classes look like. We know what the three asset classes that fit in the Invest 50/50 strategy look like. I want to go through and try and list out. I know there's just a bazillion asset classes, but I want to try and start checking things off the list. So when people go out there, the guy listening, maybe one day he has some assets and he's trying to get all his ducks in a row. He knows to avoid variable annuities. I'm pretty sure you're going to say something similar about REITs, real estate investment trusts.
But you know, we have people that we talk about this. The next thing I know, I hear from them and like, yeah, can you help me get out of this thing? And well, how long were you a show listener? Well, for 8 years. Well, when did you get it? 2 years ago. It's like we've not kept this a secret. You knew there, but it still happens. I don't know why, but okay, we'll go ahead and move on.
Right. So do real estate investment trusts, does that make the blacklist?
Non-tradable REITs. REITs that can trade on the market are not forbidden there. If I'm going to utilize REITs, once again, I would like to do it through an ETF instead of going and buying an individual REIT, kind of like going and buying an individual stock. And I'll tell you, I'm kind of down on REITs in general right now just because of what's going on commercial real estate, what's going on with malls. I would be super cautious at this time. But what I mean on non-tradable REIT, when you go buy into it, can you exit when you want to? You know, or the other question is, does it trade on an exchange or not? If it does not trade on the exchange, then it's a non-tradable REIT and you don't have a clear exit, so I wouldn't utilize it.
Would that be kind of a gray area door number one play right there? Or like a REIT ETF?
Non-tradable REITs are a no-go.
They're a no-go. Okay, so what about mutual funds? You keep talking about ETFs. You could do a stock mutual fund. You could do a bond mutual fund. I noticed.
Once again, mutual funds are kind of kin to exchange-traded funds. You know, we've been the early 1900s. I'll say mutual funds have been around. They've been around 100 years, essentially, close to it. But what I would rather is have lower costs and perhaps no trading costs is another thing I like about exchange traded fund. There is no loads to them, meaning there's no commissions built in that I'm getting deducted off of my money. And on an ETF, exchange traded fund, I can trade at the market, meaning I can trade in and out of that ETF. And I'm not wanting to move in and out, but my point is I can do either buy in or exit during the market hours, where a mutual fund, you can only do that at 3:00 Central Time.
All right. What about anytime someone wants to buy something leveraged? I noticed on the show that gets shot down pretty quickly in most cases.
Yeah, using borrowed money to buy stocks, that's increasing your risk in that case. And it could go bad. Like we had somebody call the office again recently and saying, look, I did a refinance and I've got $92,000. Can I invest it? No, if you had called me up and said 92, I have 90, and I shouldn't tell it this way, but say, yeah, you know, I've accumulated and saved up 92,000 and I'm looking to do something with it, get it to work long term. I'd say, well, yeah, let's talk. But when you tell me, yeah, I've just raised 92,000 through borrowing from my home, can I invest it? No. Not even a discussion. Those are big no-nos. So leveraging, and I don't like setting up an account with the ability to borrow money against your stocks to buy more. It's a dangerous situation.
All right, door number one, door number two, door number three. Doesn't sound like there's any room for single stocks. Are single stock purchases, is that sort of a blacklisted asset class?
Well, what it means is most stocks don't outperform 30-day treasuries historically. Means you're probably not getting the selection right, and you're going to be overweighted. I would rather use exchange traded funds and link to indexes, which historically shows we skew a higher return doing so.
All right. What about these little gamey things people do with stocks? I've noticed you shoot down anytime someone wants to do an option, you know, the puts, the calls, the whatever. I don't even know what all the little matches.
Yeah, you're getting complicated there. So you add complicated, it takes more involvement, understanding, and you're increasing risk. I would avoid complicating things.
I noticed you shy away from do-it-yourself investor getting into single bonds. They're kind of clunky. The way you buy and sell them isn't so fluid, and the ETFs is just smoother.
Yeah, if you're super sophisticated, want to spend a lot more time at it and increase your risk, do that.
Okay, what about, this is going to be a touchy one. Someone's going to get their feelings hurt. What about gold? What about precious metals?
We would rather to avoid it. The dividend's not good. It doesn't behave normally. Most people are making decisions for the wrong reasons, like doom and gloom.
Is there anything I should add to the asset classes to avoid?
Digital currency, right there.
Crypto.
That was missing from your list.
Well, that will get added to the list.
It's just way too volatile, way too early in the game. Maybe it's something for way down the road, but I just wouldn't consider it.
All right, so just a final review here. Here's our blacklisted asset classes. Non-tradable REITs, variable annuities, mutual funds, anything leveraged, single stocks, options, puts, calls, whatever, single bonds, gold and silver, and crypto. There's still 3 asset classes on the board, though, that fit in the Invest 50/50 strategy. What are they again?
You know, what we want is proper asset allocation and diversification. We like stock ETFs utilizing indexes. We like index-linked investing and bond ETFs. get the right balance, right blend, those will cycle in your favor.